All right. So today we're diving into something that's been, on a lot of people's minds these days, investments.
It sure is.
But we're not just talking about any investments. We're looking at two really different approaches.
Yeah.
We've got those classic UK mutual funds, some of which have some pretty impressive returns this year. And we're going to see how they stack up against, get this, the world of cryptocurrency.
Right.
Specifically a platform called Pulse Zen.
Yeah, it's a really interesting comparison, right? Because on the one hand, you've got these, well-established funds.
Right.
And on the other, you have this system that operates by like completely different rules.
Yeah, it's like choosing between playing Monopoly, right? Like
Yeah.
familiar board game,
Yeah.
and suddenly finding yourself in some virtual reality tournament.
Yeah.
Both can be rewarding,
Right.
but the strategies are, you're playing two different games there.
It's a totally different ballgame, yeah.
Yeah.
And to give you a taste, just a little taste of what we're dealing with, some of these UK funds have been, on fire this year.
Yeah. Lion Trust Global Technology, for example. They've seen returns exceeding 30% this year alone.
30%. See, now that's something that gets your attention.
Yeah.
You know what I'm saying?
Exactly. And they achieve this by tapping into the tech sector, that momentum that's been building. They zeroed in on the companies that are really driving innovation in that space.
Okay.
But it's not just tech that's booming. You've got Artemis US smaller companies, and they've also seen remarkable success.
So is this like those scouts that are looking for the rising stars before they hit the big leagues?
Precisely. That's
Yeah.
a great way to put it. They're identifying those high-growth companies that are poised for, really significant expansion.
Okay.
But then let's go to, the more stable side of things. We've got the Invest High Yield Bond Fund. And this one's a favorite for fixed income investors.
They've managed to navigate this whole high interest rate environment, which has been tricky for a lot of people, by strategically balancing their investments between, what are considered investment grade bonds and then higher yield bonds.
So they're like creating a diversified safety net.
Exactly, within the bond market.
Yeah.
You got it. And let's not forget about emerging markets. They've been making some noise too.
Right.
HSBC, Latin American equity, and JP Morgan, Brazil equity.
Mm.
Both of those have capitalized on, this really strong regional growth. A lot of it's being fueled by economic reforms and, commodity prices.
Right. So it sounds like these funds, they've all found their lane.
Yeah.
And they're riding that wave.
They found their niche, yeah.
But you mentioned earlier that there's more to the story than just these impressive percentages.
Oh, absolutely. While a 30% return sounds amazing, and it is, don't get me wrong, it's crucial to kind of dig a little deeper. And that's where understanding these other metrics, things like annualized returns, the expense ratios, and then risk-adjusted returns come into play. Think of it like this, right?
Okay.
You wouldn't just judge a restaurant based solely on one, delicious dish that you tried, would you?
That's a great point. You want to look at consistency.
Exactly.
Ambiance, price, the whole experience.
The whole experience. That's the key. So when we're talking about evaluating these top-performing funds, we need to look beyond just the surface.
Okay.
So annualized returns, that gives us a more accurate picture of long-term performance.
Okay.
Imagine a fund had one fantastic year,
Right.
but then the other years were just, mediocre. That single year's success wouldn't really tell the whole story.
It's like comparing a sprinter to a marathon runner.
Exactly.
Both are impressive, but their strengths lie in different areas.
100%.
Yeah.
And then you've got those expense ratios. And essentially, those are the fees you're paying to have your money managed within that fund.
Right.
And they might seem small, but over time, those fees can really start to eat into your returns.
It's easy to overlook those kind of minor details when you're so focused on those gains.
Right, exactly, yeah.
Yeah.
And then that brings us to risk-adjusted returns. And this is all about finding that balance between that potential reward, but also the volatility that you're willing to stomach as an investor.
Okay.
Because a high risk-adjusted return usually means that you're getting more, bang for your buck, so to speak, in terms of the risk you're taking.
So with these mutual funds, it seems like we're seeing a focus on strategy, diversification, and a good understanding of managing risk.
Yeah.
But now let's switch gears a little bit.
Okay.
Let's talk about Pulse Zen.
Okay.
Because this is where things get really interesting, I think.
Hmm.
How does a cryptocurrency platform even compare to these giants, these established giants in the financial world? It's a whole different game, isn't it?
It is. It certainly is. And while mutual funds are out there pooling money to invest in those traditional assets, your stocks, your bonds,
Right.
Pulse Zen, it lives within the blockchain ecosystem. And it uses cryptocurrency as its foundation.
Okay, so I think I need a little help wrapping my head around this. When we're talking about Pulse offering returns, what are we actually investing in?
That's a good question. It's a really good question. So imagine like a digital ledger,
Okay.
and it records every single transaction,
Yeah.
but it does it transparently so everybody can see it,
Okay.
and it does it securely, not just in one place, but across a whole network of computers.
Oh, wow.
That's essentially what a blockchain is.
Right.
It's like this public record that's basically impossible to tamper with.
So instead of just like one bank keeping track of everything, it's like this massive shared digital notebook that everybody's got their eyes on.
You got it. You got it. And because it's spread out across so many different computers, it's incredibly secure, like I said, very difficult to tamper with, and it's transparent, so anyone can kind of look in and see the history of transactions.
Okay.
But no single entity has control over it, which is kind of a big deal.
Okay, that makes sense. But how does that then translate into Pulse Zen generating these returns? You mentioned something about compounding within the system.
Right, so Paulson has designed this really, I think, ingenious system
Okay.
within this whole blockchain framework. Think of it like this. With your traditional savings account, you might earn, what, a little bit of interest every year, right?
Yeah, a very small amount.
A very, very small amount, usually.
Yeah.
But with Pulse, your returns are automatically being compounded on a much more frequent basis.
Okay.
And it's all thanks to this mechanism that they've built into their blockchain. So it's like earning interest on your interest, but at a way faster rate.
Okay.
And that's how they've managed to achieve this average annual percentage yield, or APY, of over 35% for the past 4 years.
Wow, 35%. That's significantly higher than any of the mutual funds we were just talking about.
It is. And that brings us to, I think another really crucial point of comparison here, which is risk.
Okay.
While Pulse Zen boasts some pretty impressive potential returns, it's important to remember that cryptocurrency, by its very nature, is known for its volatility.
It's like a roller coaster ride.
Exactly.
Big upswings,
Huge upswings.
but also the potential for some pretty, scary drops.
Yeah, some stomach-churning drops, for sure. You got it.
Right.
The higher potential rewards definitely come with a higher risk appetite.
Right.
So investing in Pulse Zen means, you got to be comfortable with that roller coaster ride of the cryptocurrency market.
Right.
Now compare that to, say, something like the Bailey Gifford Global Discovery Fund, right?
Right.
They're aiming for long-term capital appreciation. They're focusing on steady growth over time.
So more like a scenic hike through the mountains than a roller coaster ride.
100%.
Mm-hmm.
But both can lead to, fantastic views and experiences, right?
Right. Right.
But the journey and the level of risk involved is very, very different.
Yeah, that's a great way to put it. So we've talked about risk, but what about just accessibility?
Yeah.
You mentioned that Pulse Zen requires maybe a little bit more, I don't know, tech savviness.
Yeah, well, think about it. With mutual funds, you typically access them through these well-established platforms, right?
Right.
Like Morningstar, for example.
Yeah.
And they provide you with all the info you need. Minimum investment amounts, all the historical performance data, that kind of stuff. It's very user-friendly.
It's like walking into, a well-lit, organized supermarket.
Exactly.
Where everything is.
You know exactly where to find what you're looking for. But with Pulse Zen, you're entering this world of decentralized exchanges. Yeah. It's more like, this bustling marketplace where you're directly interacting with this digital asset. So you need to understand things like digital wallets, private keys, how to navigate these exchanges in the first place.
So it requires a bit more like knowledge, comfort with technology than maybe
100%.
some of these other platforms.
Yeah. You're essentially taking control of your assets, which can be very empowering, right?
Right.
But also comes with, a little bit of learning curve.
So it's like the difference between hopping in a taxi
Exactly.
and just saying, take me there,
Yeah.
versus, getting behind the wheel yourself.
I love that, yeah. With mutual funds, you're in the passenger seat. You're trusting that fund manager to, navigate the investment landscape for you.
Yeah.
With Pulse Zen, you are in the driver's seat,
Yeah.
which, again, exhilarating, but it can also be a little bit challenging.
For sure, yeah. So it sounds like both offer some unique advantages. Some drawbacks, maybe. And I guess, ultimately, to decide which path is right for you, it's about you understanding your own risk tolerance, how comfortable you are with, technology,
Yeah.
and I guess, ultimately your investment goals.
100%, yeah. Now let's move on to, I think, another key factor that a lot of investors think about,
Okay.
which is the fee structure.
Ah, yes, those pesky fees.
Right.
Nobody likes to talk about them, but they can definitely have a big
Oh,
impact.
100%. With mutual funds, you've got those expense ratios.
Right.
And those are annual fees that are charged as a percentage of your investment.
Mm.
And these cover the costs of, actually managing the fund, the administration, all that stuff.
Yeah.
And they can vary depending on, how complex the fund is,
Hmm.
its investment strategy.
And I imagine those can really add up over time, especially if you're, planning on being invested for a long time.
Absolutely. Absolutely. For example, a fund with a 1% expense ratio, it might not sound like a lot, right?
Right.
But over 20 years, that 1% can really eat into your profits.
Yeah. Yeah.
Now, compare that to PulseSend. PulseSend operates on a completely different fee structure.
Okay.
Instead of those annual management fees, you have what are called transaction fees.
Okay.
These are associated with actually using the blockchain network.
So each time you buy or sell on the platform, you're paying a small fee.
Exactly. Think of it like a toll you pay to use, a high-speed digital highway.
Okay. Okay.
But these fees, they can fluctuate a little bit.
Oh, really?
Yeah, based on the network activity, which kind of adds another layer of complexity to all of this.
Okay, so there are trade-offs then with each approach.
Yeah,
Mutual funds have those, kind of recurring management fees, whereas PulseSend has these transaction fees that can kind of, ebb and flow a little bit.
exactly. Precisely. And it's tough to say definitively which one is quote unquote better because it really depends on your own personal investment style. How frequently are you buying or selling?
Yeah.
Are you a frequent trader or are you more of a buy and hold kind of investor?
It's fascinating how these two investment avenues, they seem worlds apart.
Totally different worlds.
But they ultimately boil down to these similar factors, like you said, risk, accessibility, fees.
Yeah,
But it's the way they approach those factors that makes all the difference.
100%. And
Yeah.
that's why this kind of deep dive is so important, right?
Right.
It's about giving you the knowledge to make, really informed decisions for yourself
Right.
that align with your own circumstances, your own goals.
Yeah.
Now, let's kind of wrap things up here.
Okay.
Let's zoom out for a second. Let's think about what all this means in kind of the grand scheme of this whole evolving investment landscape. You know what I mean?
Yeah, let's do it. So it's like we've journeyed through, this really impressive world of UK mutual funds with all their strategic approaches,
Yeah.
their diversified portfolios, and then kind of dove headfirst into, the whirlwind of PulseSend
Right.
and its blockchain-powered returns.
It's a wild world out there.
It's been quite a ride.
It has. And I think, what's really striking is that we're seeing these two very, very different investment philosophies kind of playing out.
Yeah.
It's like comparing a well-established, detailed map.
Yeah.
You know how to use it, you kind of get it,
Right.
to a compass that's pointing you toward, uncharted territory.
It's a great analogy. And it just highlights how important understanding these differences is, right? For any investor.
Absolutely.
Whether you're just starting out or you've been doing this for a while.
It's not about saying one is better than the other,
Okay.
right? It's about recognizing that the right choice, if you will,
Right.
depends entirely on, you,
Right.
your circumstances, your risk tolerance, your comfort level with all this tech.
Yeah, it seems like as we're looking ahead to the future of investing, it's almost like we're standing at a crossroads, right?
Yeah.
We've got these traditional powerhouses, these mutual funds that have been around,
Yeah.
right, forever.
Institutions.
And then you've got these agile newcomers like PulseSend.
Yeah, it's an exciting time.
And they're both vying for, their place in this constantly changing landscape.
It's a little unpredictable, too.
Oh, sure.
Which I think makes it even more important to have these kinds of conversations. But, it does beg the question.
Yeah.
Will we see these two worlds, which seem so different right now,
Right.
will they converge?
That's a great question. Could you see traditional institutions, embracing blockchain technology to enhance their own systems?
I think it's definitely possible. We're already seeing, these big players in finance. They're definitely interested.
Right.
They're exploring how blockchain can make things more secure, how it can increase transparency, streamline their operations, make things more efficient. Imagine a world where your stock trades were settled, instantly,
Right.
securely, all thanks to blockchain.
Okay, so that sounds incredibly efficient.
Right.
But what about the flip side of that? could we see platforms like Pulse's End becoming more accessible
Yeah.
to everyday investors, right?
That's what I'm hoping. I think as the user experience on these platforms gets better, more people are going to get interested. And especially as the education catches up.
Right,
Right. Because it can be a little intimidating for folks.
for sure.
But as that education becomes more available, we could see this really wide-scale adoption of these decentralized systems. Imagine anyone, no matter their, tech skills,
Right, right.
could access these really interesting tools.
It sounds like we're really on the cusp of something big here.
Yeah, it's an interesting time.
Hmm.
And while no one can predict the future,
Right.
it seems pretty clear that technology is going to continue to reshape everything,
Yeah.
the investment landscape included.
So as we kind of wrap up our deep dive here today, what is like the one thing, the one takeaway you're hoping that our listeners will kind of take with them as they, go about their day?
That's a great question.
Mm-hmm.
I think the most important thing is to remember that the best investment you can make is in yourself,
Okay.
in your own knowledge,
Love it.
right? Whether you're into mutual funds or you're excited about cryptocurrency or you just want to feel more confident, more savvy when it comes to your finances,
Right.
knowledge is power,
Couldn't agree more.
right?
So to our listeners, keep exploring, stay curious,
Yeah,
and never be afraid to dive deep.
that's what we're here for.
It might seem intimidating at first, but as we learned today, the rewards can be amazing.
100%.
That's it for today's deep dive.
See you next time.